Is a home a good investment? Do you consider buying a home right now way too crazy because of high inflation, skyrocketing interest rates? You might even be asking yourself, should I even consider buying a house right now? Every single client that we talk to are asking those same exact questions. And when they ask for my personal advice, this is how I answer it. It sounds silly, but it's simple. Do you plan on being around or alive in the next 10 years? If so, please do not get caught up in the high frequency emotional ups and downs of the kind of like clickbaity information that we get on the news, CNBC, all that type of thing. What I would also say is, do you think now is a good time to invest in yourself and your family's or your future well-being? I literally tell myself in the mirror every morning when I'm brushing my teeth that your future is bigger than the present. And yours can be too. In this video, we're going to review a real life case study of a husband and wife that sold their home in Iowa and moved here to the Denver metro area. In our very first meeting with Emily and Tyler here, my team and I, we asked a very simple question. How would your life change if you could get closer to family here in Colorado? If you could sell your home and have enough profit to pay off all of your student loans, your small little credit card that you have, enough for the down payment and to start that new career. How would your life change if you could buy a property within the next month, maybe 6 months or a year? How would your life change if you could start building that equity that everybody seems to want to do? Leave a comment below and let us know what you think. How our Competition Crusher loan approval program helped these two and their realtor get under contract against 3 other bids and win the first home that they placed an offer on. We're gonna hear their answer to the question, how would your life change if you could buy this property? Should they put 10% down or 5% down? And then later in the video, I'll show you our presentation tool that we use. It's an analytical total cost analysis that basically pairs any loan product against one another so that you as a consumer can figure out the exact loan program that best fits your needs now. We use a pre-qualification tool to kind of just get a preliminary understanding of what a consumer or a borrower like you might potentially qualify for. We want to know what your credit score looks like, you know, how much income you really do make. We're going to validate with that data, your income data with pay stubs or W-2s. And then we're also going to look at your asset statements, which is, you know, where's the down payment in money for closing costs coming from, and actually submit that to our team of underwriters to get a true loan commitment, meaning that every single document that we would need to actually close your loan, we can analyze and review up front to get you that loan commitment, which makes the home shopping process way less stressful, and knowing that you have been effectively validated by a human being that would approve your loan. Now think about this for 1 second. If you were selling a home, what type of buyer would you accept? That pre-qual, a pre-approved, or the Competition Crusher? One of the cool things that worked with our clients here in this case study, we, on top of the Competition Crusher, we also did our lock and shop program. So now let's get on to their answer to that magic question. How would your life change if you were able to move across state lines here to beautiful Colorado? It was simple. They wanted to be near family and in the beautiful state of Colorado. So it was quite simple. By paying a little bit of student loan debt and 1 credit card that we were able to get from a good credit score, which is 725, which is just fine to, you know, of course, buy a home, but to that excellent range, which is that 800. The Real Good Mortgage Experience is our total cost analysis. This is where we're going to pit together the analytics of what loan is best. So if you recall, they were considering putting 5 or 10% down. So you can see in this chart here, 5 or 10% down, really the biggest variance is going to be the cash out of pocket as well as the, you know, loan variance, right? So if you're putting 5% more down, of course your loan value is going to be lower. Now the difference in payment between the two is about $180 a month. Now the good thing is their monthly payment for this parcel, they could afford either down payment, right? So overall, what we decided to do was put 5% down so that they could have that extra money left over just for incidental moving costs, a little bit of paint for the new property. They wanted to do a little bit of landscaping. So having a little bit of cash left over from their home sale benefited them. Now you're gonna see in this next example here, because we decided to do 5% down, the next thing was, hey, should we lock your rate and protect ourselves from rising interest rates? Because at the time, the rate trend was interest rates were still increasing. This specific client example, the rates got worse. So when we locked their loan before they even got under contract, their rate was 5.375. Now, if they would have waited, their rate would have been 5.75%. Now that is a difference right there between the higher rate and the lower rate of about $109. If you didn't utilize a lock and shop program and rates got higher, I'm sure you could find $100 worth of balance somewhere in your spending habits that you could, cut out. But in this example, why the heck would you want to do that, since you could have already protected yourself, and then that's one less stressful thing to worry about. Now, if you can believe this, the savings in the first 5 years, $8,744 just in interest expense over the first 5 years. One less thing to worry about. You can get your loan parameters fixed and done up before you're even under contract. You can know exactly what you can afford before you're even under contract and shopping. The total outflows of interest and mortgage insurance paid in 15 years with the loan that we chose was $335,992. And if they would have waited to do that lock, their total outflows would have been $361,753. So I don't have my calculator with me. Tell me in the comments, what is that variance? Maybe Alex, my video editor, can flash that on the board. But right there, that is their savings. They plan on living in this property for at least the next 10 to 20 years, which they don't know. So 15 years, we're like, hey, let's look at that time horizon on how awesome their decision was to lock their loan in advance of getting under contract. Now, you might be asking yourself, how can I take advantage of the Feel Good mortgage experience? Well, we have all the analytical tools that you need to make proper decisions. So if you look at the link in the descriptions, we have mortgage calculator that you can download for free. You can start to mess around with our affordability calculations, our home purchase calculator. Shoot, if you're looking to potentially refinance a property, we have a calculator for that as well. Now, the nice thing is that is just going to give you some quick information. I also built that out to give you, what's happening in the rate market. There's a way for you to get all of my home course material. I have homebuyer ebooks and downloadable spreadsheets for net worth and budgeting, spreadsheets as well. Easiest and best thing to do would be to request that pre-qual certificate, which is linked in the description. You're going to answer a couple simple questions. The software will basically spit out a certificate for you, and we'll start to validate how much you can afford based on your inputs and your answers, and then get you onto my calendar for that discovery call, where we're going to begin to basically mold together your home buying journey, your mortgage journey, to prepare you for the field so that you too can beat out other buyers. You can protect yourselves from higher interest rates. No two buyers are the same. No two borrowers are the same. You have a very unique financial situation. You have unique goals that you're looking forward to achieve in the future. And we would love to be a part of that process with you.
All right. The time is now to snoop around the channel and get that brain growing. Watch one of these videos right now, here or here. And if you haven't already, don't forget to subscribe, hit that bell, and like this video so we can see each other on that regular basis. Check out our free loan qualification certificate so you can find out how much mortgage you can qualify for, and scope out our free mortgage calculators. Stay sweet.